Okay, we are recording. Hello, everyone. I am doing this recorded lecture for chapter 1 of our textbook, and we will talk about this chapter a little bit together on the first day, and we will look at ALNet and see how everything is broke down in ALNet. But as I mentioned in the previous teacher introduction and syllabus lecture, I am going to do a recorded lecture for every chapter, at least going over the PowerPoints of the chapter, and viewing those recorded lectures is what makes up your participation grade in class. So you'll have one of these for each chapter, and this will, by doing this, free up time in the classroom for us to spend actually doing exercises and problems together and getting more hands-on practice. So I'm excited about that, and I am going to go ahead and get chapter 1 pulled up, share my screen with you so we can start going over this together. So chapter 1, let me take my head out of here so I don't have to look at myself. So chapter 1, we're going over the financial accounting, financial reporting and accounting standards. And again, in chapter 1, as I already mentioned in the previous recorded lecture, chapter 1 is a lot about the standard setting bodies, the organizations involved in setting the accounting standards and some of those different things. And we're actually going to look at a few different, couple different websites as we're going through this as well, and just kind of talk about some of these things together. So financial reporting environment. So financial accounting and reporting is again the function of identifying, measuring, and communicating financial information for a business or an economic entity, right? And some of those financial statements, and again, for those of you that had me for principles of accounting, I know we've at least gotten practice with the income statement, the statement of owner's equity, the balance sheet. And now as we get into intermediate accounting, we're going to, kind of build on those again to include the statement of cash flows, and then also the statement of stockholders' equity. And when we're getting into talk of a corporation, we don't call it owner's equity anymore, then we call it stockholders' equity, right? And then some of the additional information that will be discussed and that we'll look at, again, the president's letter of a corporation, the prospectuses, reports filed with the governmental agencies like the Securities and Exchange Commission, news releases, forecast, environmental impact statements. I mean, those are all additional pieces of information that we find generally in the annual 10K report. So that's what I want us to look at now. And again, we'll probably look at one of these, or, as we go through the semester, several of these together. But I want to give you an example. So I attached this link down here, and this is actually for Apple's 10K. So again, the 10K is the annual report, and now I don't know, let's see. Hi there. I want to make sure I get on the right report. So share screen, where's it at? All right, so this is Apple's 10K annual report. And again, every publicly traded corporation is required to submit an annual report to the Securities and Exchange Commission, and required to submit, audited financial statements to the Securities and Exchange Commission. So here's an example of a 10K, and really you could do a Google search and it would pull up, the 10K of any company that you wanted to look at. This is, I think, the most comprehensive statement for a business, because it not only includes the financial statements, but then also includes, again, some of these other notes to the financial statements and letter from the president. And as we see here, some of these other things involved with the running of the company. So some of the different business aspects of the company, risk factors, staff comments, maybe properties, legal proceedings, things like that. Now we get down into part 2. selected financial data, management discussion and analysis of financial condition, quantitative and qualitative disclosures about market risk, financial statement supplementary data, changes in and disagreements with accountants on accounting and financial disclosure, controls and procedures. Now we get down into part 3 and we see some different things here about the company hierarchy, directors, executive officers, and corporate governance, executive compensation. So again, a lot of information here on the 10K. What I want to specifically show you guys, and what we'll be looking at more in depth as we go through our textbook, are the financial statements, right? So if we click here on the financial statements, that takes us right down to the income statement and the statement of shareholders equity and the balance sheet and the statement of cash flows, right? So here we're looking at a consolidated income statement. So this should look kind of familiar to you guys, right? So we've got our net sales, AKA total revenue, cost of revenue or cost of sales, some of our operating expenses, which they just divide them up into 2 broad categories here. Remember, revenue minus expenses equals operating income, right? And then we've got some of these other income expenses, income taxes, net income, earnings per share. So several good bits of information. You'll see 3 years is what they give us on these 10Ks. The year ended, and then also the 2 previous years. Now here it gives us some more information about other comprehensive income and some of these things that can be included in other comprehensive income. Our balance sheet, remember our balance sheet lists our assets, liabilities, and equity. So you see our Apple's balance sheet here. Equity, statement of shareholders equity, and there's, a lot going on. I know when we think about the statement of owner's equity that we looked at in Principles of Accounting 1, it was a lot more basic than this, right? But now we're looking at a corporation. We've got some different things that make up equity. So we've got common stock and additional paid-in capital, retained earnings, other comprehensive income to get our total equity. So just, again, kind of the basic format as far as beginning balances plus or minus any changes equals ending balance, but just in a little bit more comprehensive format. And then again, we see the statement of cash flows. Now, this is something that we have not gotten practice with in Principles of Accounting, but we will spend a lot of time on in intermediate accounting and make sure we know how to prepare this statement. Essentially, the statement of cash flows is divided up into 3 main categories: operating activities, investing activities, and financing activities. And so we see the operating activities section here. We see the investing activities section here. And if we continue down, the financing activities section here. So again, we'll get more practice preparing this statement and these other statements together. But I just kind of wanted to show you the 10K report and some of the different information included in there. Let me stop sharing this now. Hello again. And I want to get this closed out. Okay. All right, let me get the PowerPoint pulled back up now. All right, so where were we at? I don't know. It started us back over at the beginning. Okay, so we talked about these, and that's when we went to this link. Okay, good. All right. So, it's essentially overall, financial accounting and reporting it is important for companies as it relates to capital allocation, because, if you think about capital allocation, when companies want to raise a large amount of capital, they have a couple main ways that they can do it, or a few main ways that they can do it. So they can issue stock, for example, right? They can sell shares of their company. They can issue stock. And, to determine who it would be willing to invest and who wants to invest in the company, they have to be able to show their financial statements and show that they are in fact, a company that has potential to invest in, right? So allocating that capital of investors, or that capital of stockholders, and how that gets allocated, right? Then you can also think about a company, if they want to raise a large amount of capital, they can issue bonds. Again, their bonds are going to be worthless unless through financial reporting they can prove that they are worth investing in, right? That they would be a good investment for the bondholders. They can also take out a loan, right? And in that case, they have to prove to the bank or prove to the lender or the creditor, that they're worthy of that risk, right? That they deserve those capital funds, or they deserve that allocation of capital. So that's kind of where accounting and capital allocation link together, is that we need financial accounting and reporting to be able to, as a company, to be able to raise capital funds, whether it's through the selling shares of stock, selling shares of our company, whether it's through issuing bonds, whether it's through taking out a loan. We have to prove that we're worthy of that, right? So some of the objectives of financial reporting, again, the general purpose financial statements provide the financial reporting information to interested users, whoever those may be. Again, it could be investors, it could be creditors, it could be lenders, it could be other types of shareholders, suppliers, what have you. Equity investors and creditors. Investors are the primary user group. They are who are primarily interested in the financial statements of an organization, whether or not they want to invest in that company, or lend money to that company, right? Entity perspective, and I know we talked about this a little bit in Principles of Accounting. The business entity assumption, or the separate entity assumption, says that the company should be separate and distinct from the owner. That business expenses and business revenues should be kept separate and distinct from the owner's personal expenditures, for example, right? So companies viewed as being separate and distinct from their owners. And then decision usefulness. Again, financial accounting and reporting is meant to provide the financial information for decision-making purposes. So, investors specifically are interested in a company being able to generate revenues and control costs in a way that they earn a net income and can protect that investment and help grow that investment. All right, so the need to develop standards, again, we've talked about generally accepted accounting principles before, although we didn't get too far in depth into GAAP in Principles of Accounting, but we did discuss some of these generally accepted accounting principles. Now going into intermediate accounting, we're going to discuss this more, but we had to develop these generally accepted accounting principles so that financial accounting and reporting is cohesive across the board, right? The standards, just like it shows here, develop a set of standards that are generally accepted and universally practiced. From those generally accepted accounting principles, then we can prepare our financial statements, right? And so when we value, for example, accounts receivable, or when we value inventory, or when we value other investments and financial instruments and stuff, we do that according to generally accepted accounting principles, right? And some of these parties or organizations involved in the standard setting, again, the three main organizations: the Securities and Exchange Commission, the AICPA, or the American Institute of Certified Public Accountants, and then of course the Financial Accounting Standards Board, FASB. And actually, of these three organizations, you could, easily say that the Financial Accounting Standards Board has the largest impact on the generally accepted accounting principles that are established, and then updates to the principles and to the concepts. So, Securities and Exchange Commission. So, Securities and Exchange Commission was established after 1929, after the stock market crash, so that the government had a way to better regulate the financial workings of companies, right? So established by the federal government. And it has a hand in the accounting and reporting for public companies, because if a company is publicly traded, they are required to be listed with this Securities and Exchange Commission, and they're required to submit their financial statements, audited financial statements, to the Securities and Exchange Commission on a quarterly and an annual basis, whereas a privately held company is not, right? So Securities and Exchange Commission deals with reporting for public companies, right? So through a couple different legislative acts, Securities Acts of 1933, Securities Acts of 1934, the SEC requires, again, that public companies adhere to GAAP. And the oversight that SEC has, I mean, they essentially are, a main authority figure, or a main authoritative player in the financial market, because several things that the SEC is involved in the oversight. For example, if the private sector has a proposal, they might submit the proposal to the SEC, and the SEC would either reject or approve that proposal, right, on an accounting or accounting standard, something like that, right? The SEC might also encourage private sector to take quicker action on a certain accounting reporting problem, something like that. The SEC also communicates with the Financial Accounting Standards Board to come up with drafts, standards updates, and concepts and things like that. So they work directly with the Financial Accounting Standards Board and really have oversight over it in that way. And then the enforcement authority, I mean, basically enforcement, if a publicly traded company, if the Securities and Exchange Commission finds a problem with a publicly traded company, they issue or they send a deficiency letter to the company. And in most cases, companies will generally resolve these deficiencies pretty quickly, right? Because you definitely don't want to be caught, a company definitely doesn't want to be caught in a feud with the Securities and Exchange Commission, right? So Securities and Exchange Commission sends a deficiency letter. Generally speaking, the companies will resolve this deficiency pretty quickly and maybe issue, revised financial statement or something like that. But in more extreme cases, then when it's not, the deficiency is not addressed and is not corrected, then the Securities and Exchange Commission issues a stop order, which prevents the company in question from selling any shares of stock on the open market, whether it's the New York Stock Exchange, NASDAQ, what have you. And then in the cases of severe, misuses of accounting information, or, if we know there has been an extreme departure from GAAP, for example, then that's when the DOJ, the Department of Justice, might be called in if there is criminal activity involved. So they do have, again, Securities and Exchange Commission, although they're not directly involved in establishing generally accepted accounting principles, they do work hand in hand with the FASB or the Financial Accounting Standards Board. Okay, the AICPA, American Institute of CPAs, and I just realized I usually like to make this big, so we're going over this bigger together. I don't know why I didn't do that. Let's see. We went over that. We've covered that. Okay, so the AICPA, American Institute of Certified Public Accountants, this is a national organization of CPAs, and they did help too, and we see kind of some of the dates here from 1939 to 1973. They did help to establish many of the generally accepted accounting principles that we still use today, right? All of these that were established from 39 to 73, you know, are still on the books, even if they have been amended at some point. But the Committee on Accounting Procedures, or CAP, that went from 1939 to 1959. It was essentially comprised of practicing certified public accountants. They issued 51 accounting research bulletins, or ARBs. The problem with CAP, that your book tells us, is that they took, or the issue with CAP is they took a problem by problem approach, which was not very efficient in solving kind of accounting issues. So that's why we eventually moved to developing more of a conceptual framework, right? And then everything could kind of be dealt with within that conceptual framework. So the CAP, or Committee on Accounting Procedures, was dismantled in 1959, and the Accounting Principles Board replaced it. So from 1959 to 1973, we had the Accounting Principles Board. They issued 31 Accounting Principle Board opinions, or APB opinions. The major purpose of the Accounting Principles Board was to, or the major purposes rather, were to advance written expression of accounting principles, determine appropriate practices, and then narrow the areas where there were difference or inconsistency in practice. So kind of their main function. And then in 1971, there was established, I think it might, and it does talk about a little bit here, I think on the next slide too. In 1971, the accounting professions leaders established a study group known as the Wheat Committee. The Wheat Committee found that the APB needed to make some changes to obtain better results. And in that case, the Wheat Committee recommended, essentially adopting, or creating rather, the Financial Accounting Standards Board. So then that's what happened in 1973. Kind of the Accounting Principles Board turned into what we now know as the Financial Accounting Standards Board. All right, so Financial Accounting Standards Board. So the Wheat Committee, after the Wheat Committee in 1973, recommendations resulted in the creation of FASB, or the Financial Accounting Standards Board. And essentially with that, they developed the Financial Accounting Foundation, just like it shows here. Financial Accounting Foundation selects the 7 members of FASB, funds their activities and exercises general oversight. Financial Accounting Standards Board, of course, just like it shows here, we want to improve the standards and financial reporting. And then the FASAC, or Financial Accounting Standards Advisory Council, they consult on major policy and technical issues, and help specifically on, task force members on select topics. So again, of these 3, although all 3 of these were created out of the Wheat Committee's recommendations, the kind of the major player here is the Financial Accounting Standards Board, because again, they are who establish and who maintain the generally accepted accounting principles. All right, so Financial Accounting Standards Board, couple differences here between the Financial Accounting Standards Board and the APB, which it replaced, the Accounting Principles Board, which it replaced. So smaller membership, I think Accounting Principles Board was made up of 18 to 21 members, whereas FASB, the Financial Accounting Standards Board, is made up of 7 members. They're full-time remunerated membership, which means they are essentially full-time employees, and they're able to renew their membership every 5 years if they still want to keep them on there. They have greater autonomy and increased independence in the sense that remember the Accounting Principles Board was through the AICPA. So the Accounting Principles Board was essentially underneath the AICPA, whereas FASB, Financial Accounting Standards Board, does not answer to the AICPA, for example. So they have that greater autonomy, right? Increased independence, again, in that same sense, and in the fact that the practicing CPAs that worked at the Accounting Principle Board maintained their careers. In other words, they kept their full-time jobs and then they worked at the Accounting Principles Board as well, right? With FASB, or with the Financial Accounting Standards Board, those 7 members are required to sever all ties with their previous business dealings and have just, you know, only work and commit to only working at FASB. So, you know, again, that helps eliminate some of that, you know, potential conflict of interest and things like that. And then broader representation, again, the Accounting Principles Board was made up of practicing CPAs, whereas FASB, that's not necessarily a requirement, although generally speaking, members are pretty high up within the business field, if not financial analysts and experts in financial information as well. So anyway. All right, so this shows us here, and this is on page 11 of your textbook, and basically this just shows us here the process that that a piece of proposed a proposed principle or a proposed update to a principle goes through, right? So this is the due process that they talk about on page 11. So, you know, we think about, you know, topic A, topic B, topic C. So topics are identified and placed on the agenda. We weigh the pros and cons of each topic. Research and analysis is conducted, and we can kind of analyze each topic and analyze the pros and the cons. We would have a public hearing on the proposed standard. And from there, an exposure draft is created. The board evaluates research and public response and issues the exposure draft. And then if that is accepted, and then it becomes an accounting standards update. So board evaluates responses and changes exposure draft if necessary. Final standard is issued. So again, that kind of just shows the process. And I want to say, if I'm remembering correctly, and I can't remember if it was on quiz 1 or exam 1, but I think you need to kind of know these 5 steps. I want to say there's a question about it. It's either on your first quiz or on your first exam, where we kind of need to know this, the sequence of steps here. All right, so types of pronouncements, accounting standards updates, financial accounting concepts. So accounting standards updates, there's really 2 types of updates. There are one type of update that modifies or extends a current update, or The second type of update is kind of a decision, a consensus or guidance on an update that or on a accounting standard that's already existing, right? So two types of updates. One that modifies or changes or amends or extends an accounting standard, or the second type of update that just essentially issues a decision or a consistency or gives guidance on an already existing standard. And we're going to look at one of those together. And then also the financial accounting concepts we see here. I've got one of those pulled up for us to look at together. What was I listing here? Yeah, okay. So let me click on this, and I want to pull this up, and I'm going to make sure that I reshare the screen so we look at it together. So FASB.org, Financial Accounting Standards Board. See, I don't know when I click on a different website if it then shares that screen with you, or if I have to stop sharing the PowerPoint and get the other one pulled up. But so here's our Financial Accounting Standards Board homepage or website. And so if we want to look at accounting standards updates, or if we want to look at financial accounting concepts, right, this is where we go. So we see our standards here, and we can see here accounting standards updates issued, concept statements. So we'll click on this standards updates issued first. And so we see here some standards, some updates that have been issued, going all the way back on this website anyway to 2009. I'm sure that we can find years older than that if we wanted to do that also. And so, and I have one pulled up already on my computer. The most recent one actually I have pulled up on my computer. When was it? Right here, this one. May 2020, there was an update, and I've got this one already pulled up on my computer, so we're going to look at that one together. So I wanted to show you where we look at these updates. Again, these are the ones that have happened this year so far. We had one in April of 2020. We had one in March of 2020. We had one in February of 2020. We had one in January of 2020 there. So we've already had some here in 2020. So those are again, the accounting standards updates. And then I want to show you the concept statements. And so if we go here, and I have these pulled up as well. So we're going to look at one of these together. But concept statement number 8, or chapter 8 as it's referred to, talks about notes to the financial statements. If we go down here, concept statement number 7, or chapter 7, I guess you could say, talks about using cash flow information and the present value in accounting measurements. Chapter 6, elements of the financial statements. And that it says a replacement of FASB concept statements number 3, incorporating amendment of FASB concept statements number 2. So, they keep building on each other. Number 5, recognition and measurement in financial statements of business enterprises. Number 4, objectives of financial reporting by non-business organizations. So, again, we see those here, and I have one pulled up that we can look at. So I'm going to stop sharing this screen with you. Hello, everyone. And let me go back to here. Get that one. Okay, so now share my screen again with you. I might be sharing too much. Maybe I don't have to keep clicking back and forth, but I'm just not sure. So I am, just in case. Okay. So here's an example of that accounting standards update. And again, this was the most recent one issued. I know it says June 20, but 5/2020, I guess, is probably published in June 2020. But this has to deal with revenues from like franchise agreements and then lease agreements. And so we can see in the first, and I highlighted a few things just to kind of point out, this document, let's see, let me go back up and see, here it shows us 26 pages. So it's a rather long document. We're obviously not going to read through the whole thing together, but I've just kind of highlighted how we look at these things. So the first thing that we're looking for is, what is this for, right? Why is the FASB issuing this accounting standards update? And it says right here, coronavirus disease 2019, COVID-19 pandemic is adversely affecting the global economy and causing significant and widespread business and capital market disruptions. The board is committed to supporting and assisting stakeholders during this difficult time. So we know that it's going to have something to do with our current business environment, right? And then it tells us here, accounting standards, revenue from contract. Again, these are like franchise agreements, and then also with leases. So if we keep scrolling down again, and we're not going to read through this whole thing, but just to kind of highlight some of this thing, some of what it's talking about here. So with the revenue recognition from franchise, some of these amendments that were proposed were supposed to take effect. Some of these companies it was supposed to take effect and implemented, the end of 2019 or 2020. And so now they're saying they're going to defer the effective date. So that's what it's showing here. And so the primary question raised by stakeholders is to how to record the franchise fees and franchise revenues. The amendments in the proposed update, the board had proposed deferral of the effective date of revenue for franchisors. So, essentially because of COVID, they're giving them more time to implement these updates to how we record franchise revenue. Same thing with leases. Some of these, private companies or not-for-profit entities, NFP, not-for-profit entities, it's more difficult to implement these updates or these changes. So, just like it shows here, the board noted that challenges associated with transition to a major update are often magnified for private companies, for smaller public companies, and for NFP entities. Again, NFP, not-for-profit entities. So, again, because of COVID-19, they have decided, and that's where we go back here. What are the main provisions? The amendments to this update defer for 1 year the required effective date of the revenue for certain entities that have not yet issued their financial statements. Leases. The amendments to this update defer the effective date for 1 year for entities in all other category and public not-for-profit entities that have not yet issued their financial statement. So it's just giving these companies more time to comply with the updates to franchise revenue recognition and the updates to leasehold agreement recognition. So anyway, that's an example of an accounting standards updates. And yeah, they're, as you can imagine, really fun to read, right? Okay. The other one that I wanted to show you is, again, one of the statements on financial accounting concept. And this is number 8, or what is also referred to as Chapter 8, Notes to the Financial Statements. Now, again, this thing is 44 pages, so we're not going to read through this entire thing. I just kind of wanted to show you what it looks like and where we find these things. So notes to the financial statement, it goes into depth about all of the information that should be included in notes to the financial statements. And so if we scroll down, we can see again, table of contents here, the paragraph numbers, what's being discussed in each paragraph. This chapter discusses the information that should, and I'm reading right here, this chapter discusses the information that should be considered for inclusion in notes to the financial statement. It also addresses considerations specific to notes to interim period financial statements. Remember, interim period are like quarterly statements or monthly statements, right? Like in the middle of the year financial statements, basically, is what that means. And again, we can continue to go down and look at each one of these, but it just discusses in depth what should be included in the notes to the financial statement. So I'm going to stop sharing that. Hi guys, I'm going to get get the PowerPoint pulled back up so we can move on. Okay, so we looked at FASB. We looked at examples of the accounting standards update. We looked at example of the concepts, so you guys know where to find them. Anybody has access to that, just like we looked at together. Okay. Uh-oh. Come on now. All right. So generally accepted accounting principles, principles that have substantial authoritative support. And as we see here, the major sources of the generally accepted accounting principles are the FASB standards, interpretations, and staff positions, the APB opinions, and the AICPA accounting research bulletin. So, you know, remember the Committee on Accounting Procedure that was established by the AICPA, they're the ones who, AICPA, they're the ones who issued the accounting research bulletins. And then the Accounting Principles Board, which was the successor, I guess you could say, of the Committee on Accounting Procedures, they issued the APB opinions. And then finally, we have the successor of the Accounting Principles Board was the Financial Accounting Standards Board. All right, so the FASB codification, you know, similar to the way the laws of our country are codified, and it is very similar to, you know, the way our laws are codified. So if you have not taken business law yet, and you're seeking a business degree or accounting degree, I believe you're going to have to take business law. And what you're going to learn about is how our legal system codifies all the laws within our code, right? And so we have the same thing in accounting, and we learn more about this too in taxes, because the accounting codification or codification goes, you know, right in line with the Internal Revenue Code as well, right? They're organized into paragraphs and subparagraphs and specific topics. And, you know, I know you guys are going to be super excited because we're going to look at this code together. But basically the purpose of this is to provide essentially a one-stop shop where all of our authoritative literature, pronouncements, or updates to the standards in a particular topic. So as we're going to see, we can look at all of the information related to receivables. We can look at all of the information related to inventory. We can look at all of the information related to, you know, other types of financial investments, things like that, right? And so this gives us kind of that one-stop shop to go to rather, and to look up this information, right? To look up the rules. And so FASB developed the Financial Accounting Standards Board Codification Research System, or CRS. And, you know, again, it's that one-stop shop to go and look at all of this information. So let's go there now. I'm going to click down here. We're going to pull this up and look at it together. And again, just because I don't know that you can see the codification screen as I can right now, I'm going to stop sharing the one and pull up the other. Let's see, here we go. All right, so now we see here, we're back at the FASBA or FASB website. And we're going to go to codification. And we're just going to say access basic view. I'm not a robot. It's going to make me say, oh gosh, select all images with crosswalks. Okay. I don't think that that's a crosswalk. That's like a train track. That's a crosswalk. It's a crosswalk, and I don't know. You can't really see one in that picture. Let's see if that does good. All right, access the basic view. Okay, so now you see it pulls up. Oh, we got to agree to all their terms, which I'm not going to read. Okay, so now we're looking, and here's our codification. Here's how it's divided up. So general principles, presentation, assets, liabilities, equity, revenue, expenses, broad transactions, industry, and then a master glossary of it all. So, we're again, this thing is very, very deep, right? We could spend hours and hours and hours going through this thing, but let's just look at an example. So let's say we want to look at assets, and let's say in assets we want to look at receivables, and let's say we want to look at receivables. Oh, hot dog. Receivables, and now we see over here we add overall receivables, non-refundable fees and other costs, loans and debt securities, troubled debt restructuring, agricultural. I'm trying to, I didn't mean to click on that. Agricultural, contractors, construction, federal government, entertainment, financial services, healthcare entities, not-for-profit entities, real estate. We got it kind of all these things. Let's just say overall. So overall now it goes into, several different areas, right? We can go overall background, scope and scope exceptions, recognition, initial measurement, subsequent measurement, derecognition, presentation matters, disclosures, guidance and illustration, relationships, status, subsequent, all kinds of things here, right? Again, we're not going to get too deep into this. I just wanted you guys to know kind of where we go to find this stuff and where all this stuff is listed, right? Okay, so I'm going to stop sharing this. Hi there. Get our PowerPoint pulled back up. All right, and I don't know, it keeps taking us back to, here we go, our slideshow. Okay, so now we know where we go for that. And then we just saw this, and now you see it kind of laid out in this type of hierarchy here. So again, we've got the main topics. In our case, we looked up receivables. And then from there, we've got the subtopics, and we looked at overall, several different of those subtopics. And then once we click on those, we have the sections. So initial measurement, for example, subsequent measurement. And then under the sections, we have paragraphs, which talks about, for example, if we look at, okay, so subsequent measurement of receivables, then we could break down into loans and trade receivables not held for sale. So, just each level gets a little bit more in depth, right? We kind of looked at that on the FASB website. Something to kind of keep in mind is that, not only when we think about some of our accounting standard updates, pronouncements, staff positions, things like that, there's an external environment or political environment. And by political environment, we don't mean, Republicans and Democrats political environment. We just mean the overall external politics that are involved in the establishing of these generally accepted accounting principles and accounting standards updates. So, FASB takes input from business entities, from the financial community, from certified public accountants and preparers, from government entities, from industry associations, from the public, from academia, from AICPA. Again, there are, many different external factors involved in this establishing of generally accepted accounting principles. So it really is a very inclusive or all-inclusive type of process, right? Because it includes not only, one organization, but all of these organizations working synchronously together. So, all right, so the expectation gap, in Principles of Accounting 1, we touched on ethics. We're going to discuss ethics again. In any accounting course, really, you discuss ethics and kind of what is the expectation of accountants and of the accounting field. And you know, there really is a gap between what accountants know that we can do and the information that we can provide and what the public thinks that we can do and the information that we can provide. And it all kind of comes to light when, you know, there's an accounting scandal that props up, and then you hear, you know, reporters on the news, and you hear the public saying, well, why wasn't this found? And why wasn't, you know, when the auditors did this, or when the company employees did this, you know, why wasn't this found, or why wasn't this highlighted? And the fact is that there are ways to cook the books, right? That may not be discovered right away. So, you know, we kind of have to deal with that, and we have to put controls in place to prevent that and to deal with that when it arises. And one way that that Congress has helped with that is Enron, which was a large American corporation that went bankrupt in 2001. After the bankruptcy of Enron in 2001, I believe it was December 2001, Congress enacted the Sarbanes-Oxley Act in 2002, April 2002. And so the Sarbanes-Oxley Act put a few things into place so that, you know, we could help make sure that accounting scandal at the magnitude of Enron would hopefully be prevented in the future. Because Enron, I think with the fall of Enron and the fall of Enron's accounting firm, which was Arthur Andersen, a large public accounting firm, I think 60,000 people, you know, lost their jobs, and, you know, millions upon millions of dollars in pensions and things were lost. So it was, and still is, considered one of the most, you know, major accounting scandals in American history. So the Sarbanes-Oxley Act created the Public Company Accounting Oversight Board. The PCAOB has oversight and enforcement authority and establishes auditing, quality control, and independent standards and rules. The Sarbanes-Oxley Act also implemented stronger independence rules for auditors. Also required CEOs and CFOs to certify the validity of the financial statements, requires that audit committees be independent from operations of the company, and requires codes of ethics for senior financial officers. So Sarbanes-Oxley did kind of several things in that way to help close this expectation gap and to help, you know, again, prevent accounting fraud at the magnitude that we saw at some of these large companies like Enron and WorldCom and Sunbeam and Xerox, you know, some of these companies discussed in our textbook. All right, so some of these financial reporting challenges, right? So some of the reporting challenges, so non-financial measurements. One of the challenges of financial reporting is that financial reports, like we think of, you know, our income statement, our balance sheet, our statement of cash flows, some of these financial reports fail to provide key performance measures like customer satisfaction indexes, for example, backlog information, reject rates on goods purchases, return rates, things like that. So those are some key performance measures used by management that are not necessarily shown in our financial reports, our main financial reports. So there are some limitations to our financial reports, right? Some of these non-financial measurements. Also, financial reports show essentially historical data, or what has already happened. So financial reports are not forward-looking in any sense, right? Financial reports, again, income statement, statement of stockholders' equity, balance sheet, statement of cash flows. These are prepared using the historical data, or what has already happened, past information, right? So they're not forward-looking where our budget would be forward-looking information, right? Financial reporting doesn't often focus highly on soft assets, or what are also known as intangible assets. So we oftentimes in our financial reports focus on the hard assets, inventory, plant assets, land, things like that. We don't focus too much on the soft assets, the intangible assets like the goodwill and the patents and brand names and trademarks and things like that. Brand image, things like that. Another limitation, timeliness. Generally speaking, our financial reports, like our income statement, our balance sheet, our statement of cash flows, sometimes by the time these reports are issued, the information, for example, is not relevant maybe at that time. So timeliness, in a sense, it'd be nice to have some real-time data. Like, maybe we don't want to wait to the end of the quarter to know what revenue was, right? It might be nice to have some real-time data to make some of those decisions. And then understandability. I mean, the common person can't just look at financial statements and know what they're looking at. It takes at least, a class in principles of accounting to kind of understand what you're looking at. It's not something that the average Joe Schmo can understand. So that's another limitation or challenge in financial reporting. All right, the international accounting standards. So right now in the United States, most companies use GAAP, the generally accepted accounting principles. However, there are some instances where IFRS can be used, the International Financial Reporting Standards. And the thing is we use GAAP, again, for the vast majority, or vast majority of companies adhere to generally accepted accounting principles in the United States. But the rest of the developed world uses IFRS, the International Financial Reporting Standards that are issued by the International Accounting Standards Board. So for several years now, there has been a project underway to converge the International Financial Reporting Standards with the generally accepted accounting principles, right? Because it would be nice that if we had, kind of this global reporting standard, so that when we're comparing an American company to a European company, for example, we're comparing apples to apples. And a lot of it is the same. And we're kind of, as we go through each chapter, we kind of touch on what's the difference between GAAP and IFRS as it relates to that chapter. But there are, a lot of similarities, and then there are some differences as well. So again, there's been this plan of convergence now for several years, and it's still in the works. And so eventually, hopefully, we have kind of just this main global financial reporting standard that all companies are required to follow. Right now on the CPA exam, you have questions about GAAP and IFRS. So just for understandability and also application, it'd be better to kind of have one cohesive reporting standard. And that is kind of in the works, but it's not something that's easy to do, and probably won't happen maybe in our careers. Who knows? We'll see. All right, and that's the last thing here, is the insight to the International Financial Reporting Standards. And just like I mentioned, the Security Exchange Commission, the Financial Accounting Standards Board, and the International Accounting Standards Board have been working together to develop fully cohesive or compatible financial reporting standards. A lot of it is the same, and again, we'll look at similarities and differences as we move through the textbook. Much of it is the same, but there are some particular differences. For example, we use in GAAP historical value for many assets, where IFRS use fair market value. for many of there. So, you know, just to give you one example, but again, as we go through the chapter, we will talk about more of the similarities and differences between GAAP and IFRS. And that is the end of it. So again, we will touch on, hi there. We will touch on some of these things the first day of class, although I'm not going to do this PowerPoint lecture again. We will touch on a few of these things. And then again, we're going to get some practice kind of reminding our brains about where we left off in Principles of Accounting. And I look forward to that. And I look forward to seeing you guys, and I miss you. Bye guys. See you later.